All right, and welcome everybody. We're going to go ahead and go through and talk about what it is that we do at Mint Builder, how it can benefit you. We're going to talk about some of the things that you can do to position yourself with the economy, no matter how dire it is. You know, we're kind of in a tough spot. It's not the first time that our country or any country, for that matter, has been in a tough spot financially. You know, with things changing, we just have to adapt. And you know, there's things that have been put in place, people have been doing for centuries, that has worked, that has been able to catapult them in, you know, and especially even in times actually when it's tough like this. I know a few people that actually did they doubled the size of their net worth during our biggest times of adversity, like 2008 housing crash, the 2020, things like that. So it's not going to be different as far as that goes, but there is different things happening, different players, just knowing what to do. So right off the bat, I want to just let you know that, you know, we're not financial advisors here at Mint Builder. We are precious metal specialists. I've been in the industry myself since 1998, I think. So for a long time. And so this is what we're going to talk about. As far as financial advice, you can seek a professional for that. And you can, you know, take this as education. And it's really good to do your own diligence and find out for yourself what you see that's happening as well. So basically, our currency is on its way to zero. You know, we've known that. This isn't new. This isn't something that is new that's happening. This is something that's been happening going back over 100 years. So basically, what can you do? That's what we're here for. We're not here just talking about doom and gloom. We're talking about what can we actually do to prepare for that, right? So your financial wellness, that is what our mission is here at Mint Builder. That's what we built Mint Builder. It's not just another precious metals company that sells silver and gold. There's more to it, more to Mint Builder than that. So let's go ahead and kind of just jump into the whole thing of what we're doing here, why we're doing it. You know, most people have dreams through their childhood, young adults, and maybe even older in older years that they are going to eventually achieve financial security and they're going to become wealthy. You know, they're going to be able to live on their own terms. And somewhere along the way, unfortunately, probably 8 out of 10 people don't actually, you know, achieve what they are setting out to achieve. And that's the sad part, because it doesn't have to be that way, but it can change. But it's not because they can't do it. It's just because they're missing the right actions. You know, what we do, our behavior that we do daily is what really promotes success or lack thereof success. So that's what we're going to focus on just a little bit. And I've been told this a lot of times in my life that, you know, you're so lucky or this or that. And you know, I'm thankful is what I am. Lucky isn't really the right word for it. Lucky is, you know, if you win the lottery. But if you position yourself to do something correctly, then all of a sudden you're lucky, and you know, you're going to raise the odds of your luck, if you will. So really, it's about education. You know, I'm not talking about necessarily university. I'm talking about, you know, self-education, you know, specifying, you know, what is exactly that you're trying to learn. We're going to talk about financial stuff tonight. That's what we're going to go through. But there's other things in life too. This is one aspect that's really important to get straightened out and get in line. And then once you do that, you feel more free, have more liberty to you know, kind of work on the other areas of life, whether it's fitness or, you know, health or you know, relationships, whatever it may be. You know, we should be working on all those things, but we're specifically going to be talking about the financial aspect of it. So getting that right kind of education, knowing what you're doing, is very important. Then it's planning. So now you have the tools, you understand things, you have a toolbox with tools in them. Now you need to plan out how to use those tools, where you're going to use them, you know, and that's kind of moving forward into it. And then once you do that, you're going to be consistent. You're going to keep doing it. It's having success. You know, maybe it's a little bit at first, and you just keep pushing and pushing, doing the same thing over and over because you know it's the right thing to do, and you're seeing results. Maybe not exactly the ones you want to see, but you're going to fine tune it. You're going to hone in, and you're going to get better. And these are the basic 3 steps of being lucky, if you will. So it's kind of simple. You know, saving is the first step. I believe there's a bridge with 10 spans. In the bridge, and I think the first span before you can even move forward is being able to, you know, have some savings. And you know, you don't need what most people say, I will do it once I make more money, you know, once I get some more income, I get my next raise. It's not going to happen, and there's multiple reasons for it. One is maybe your raise isn't keeping up with inflation itself. The price of goods are going up faster than that. So that means it's more important to scrape and scrounge to be able to save now rather than try to do it later. It's not going to happen that way. Just for most people, it doesn't work. And you have to start with an emergency fund. I think that, having 1 week's worth of income put away is like the first step. And then you want to get it as quickly as possible to 30 days. And then with those 30 days, I don't think it should be all cash. We're going to go into that a little bit more in a minute. So expediting your savings should be done with cash and with assets. Like I said, we'll talk more in depth on it in a little bit. So we're talking about precious metals, of course. On Mintbuilder, that's what we're mostly all about. And you have other assets in life, of course, but when you're talking about precious metals like silver and gold, now you're talking about something that can be liquidated very easily. Something that's kind of like a financial insurance. It's something that kind of tracks a long history. And when our currency is going down, typically at the same time, silver and gold is going up. So it's doing this it's doing the opposite thing going on. So it's protecting you. So if our currency has dropped 25%, typically gold and silver went up 25% at least. And so that's that insurance. That's a real way to save. And it's easy to liquidate precious metals, especially bullion. And we make it really easy here at Mintbuilder, even more than most other places. So this is a good place to start. Now, why would you not want to save paper currency? Well, here's a great example of why. We have 1913 when the Federal Reserve was created. That's when all of a sudden all of the control and basically what is going to happen financially in our country, what's going to happen was put into the hands of just a small handful of individuals who actually are owners of banks. And they have now all the power basically to determine what's going to happen. I believe that they have more power than even the president of the United States because they can control what's happening in the economy, and the president wants people's favor. So they need things to go good in the economy, which is putting all of the emphasis on the Federal Reserve and the central banking system. And then in 1933, there was a whole big old thing where gold became illegal, even though it's constitutional money. And that also started another decline in our currency. And then they tried to reestablish it in 1944. It took like almost 20 years, and then it just kind of fell out. Nixon then finally, it was supposed to be temporarily close the gold window, so that you cannot any longer connect, the US dollar to gold, because they were afraid that all these countries were going to start pulling out all of their gold and trading it in for the dollar. So he had to put a stop to it. There's a lot behind that. That's definitely for a different topic. But basically what that did was it put a nail in the coffin. This is it. Now our US dollar is really tied to nothing at all. People say the full faith of the US government, but it's really not even that, because it's not the government for the most part. It's the Federal Reserve. It's the central banking system is the one who actually controls what's happening. When we go to the grocery store and eggs are double the price in 1 year or something like that, just an example, housing, whatever, it goes up, all these things happen. It's really not what's happening with our government per se. The Federal Reserve is an independent company basically that's running. We have our government has a little say so in it, but not very much. So anyway, this is what's happened in the last 100 and some years. Our US dollars became worth less than 3 cents. Okay, and that was back in 2020. It's probably worth about 1.8 cents at this point of what a true dollar's purchasing power used to be, almost even going back 90 years to 1933. So that's a big deal. So why, now this should answer, why do you not want to save your hard-earned money you're working your butt off for? Why would you not want to save it in cash? This is exactly why. So it's kind of like your phone. You got your phone. The phone's a little red, battery line comes on, and you're like, oh shoot, I have to charge my phone. Otherwise the world's going to come to an end. No one can reach me. Heaven forbid about that. But, it is a panic, especially depending on what generation you're in. So the first thing you're looking to do is you're trying to find a place to plug that in, right? To get it juiced, to power it back up. And so you're doing that, and that is simple, right? It's an outlet. It's AC power, or DC if you're out in the wilderness. And this is what you're doing. You're plugging your phone and getting it charged up, right? And then the phone is workable again. You're getting the phone worth more in usage. And the same thing, it's not different. When we're talking about our wealth, what real money is, you're holding paper fiat currency. That's not money. It's called currency for a reason. Think of a river. A river has a current, it has to flow. If it stops flowing, it's stagnant, it becomes worthless. Think of electricity, it's a current, electricity is current. When electricity stops flowing, there's no more current, it doesn't charge, it doesn't work anymore, it doesn't power anything. And our money was designed the same way. That's why it's called currency. It's meant to keep flowing. It's meant to go get something, come back and go in, and it has to keep moving from hand to hand to hand. And really, the only one gaining from it is the government and the banks and central banks, because they're the ones that are basically gaining back. When it goes down 98% in value, where did that go? Well, it basically went back to them in a form. Okay, so what we can do though is we can charge our wealth up still, even though that's happening. It doesn't matter. There's other ways around it. There's ways that people have been using for hundreds of years, and I'm going to tell you the ultra wealthy, the elite class, and I'm talking about the less than 1%, typically the 0.1%. They know this, and they've been doing it for a long time. And you go back to the Rockefeller, the Vanderbilts, JP Morgan, and they've been doing this. And they've been teaching their family to do the same. It's not something you're taught in school for the most part. I wasn't. My parents didn't know about it, so they didn't teach me. And that is plugging in your hard-earned money, currency, into something else so that you can at least preserve it or help it grow. So that is gold and silver. You plug it into that, and now you're gonna basically get a charge in your wealth. So here's a little known fact. Banks are trading currency for silver and gold. They're not talking about silver and gold. It's kept very hidden. Matter of fact, the Federal Reserve hasn't been audited. I can't remember how many years it's been, decades and decades, hasn't been audited for so long. And it's not because necessarily they don't have the gold in Fort Knox. It's not because they maybe don't have that, but it's more, I think, they don't want to make a big deal about gold. They don't want to talk about gold. They want to keep gold and silver out of the spotlight. But if you watch in the background, you're going to see what's really happening. For example, JP Morgan Chase actually got in a lot of trouble. They were cornering the market, and they got fined for, I think, more than $1 billion. 675 million ounces of silver. That's what JP Morgan owns. Why? Why do they want silver? Why does nobody really know about this? Why is it not common knowledge so that everybody can start protecting themselves just like the banks are doing? Now, the central banks themselves, like the Federal Reserve, that's the central bank of the United States. One of the, we're the top, we're the biggest central bank, and there's, top three, and they own 25% of all of the gold in the world. That's 1.15 billion ounces. They've added a record amount of gold to their holdings a year ago. So this wasn't back in the 70s, when I was a little kid. That's not when it was. Matter of fact, they had some selling time back. I think back then they might have been selling gold off because they were trying to protect the market. Right now, they're hoarding up all the gold, 25% of all the gold. Let me just tell you something. If they didn't own any gold at all, there's not even enough gold in the entire planet to give every single person an ounce. Matter of fact, I think it's like half of an ounce. So that's it. That's all the gold there is. Do you want half of an ounce of gold? If everybody went and bought it, you couldn't even beg for it. Nobody would even give it to you. And I feel like we've been in these kind of frenzies before, where people are lining up down the streets of the coin shops, blocks and blocks, and trying to get, buy the gold and silver at super hyperinflated prices. And when you follow the crowd, that's what happens. It's too late. Now you're getting in on the high side. And I'm going to talk about in a little bit how there is a pendulum that does go back and forth. And people ask all the time, do you just buy it to hoard it the rest of your life? No, I do keep a percentage of my savings at all times, but I also see what's happening in the market, and there's a time to buy and there's a time to sell. Just like there's a season, there's always a season for everything, right? And this is a time right now to buy. Why are they moving heavily into precious metals? That's what we have to ask ourselves. The world fiat currency is changing. We can say we're going digital. We're already digital. We have been. Think about it. How much of all the money that's going around in the world, currency, how much of it is actually in paper bills? A way small amount. It's less than 10%. Most all of it is ones and zeros on computer screens. Everybody uses debit, credit card, right? And that way it's a little bit more like everybody knows what's going on. So in our industry, cash, the government wants to know if someone's coming and paying you cash and they're spending $10,000 or more, then we have to submit that. We have to tell them. But if you just come and use your, if you do, even if you do a bank wire, that doesn't consider cash. If you use a credit or debit card, it doesn't consider cash. So many other things. Just cash in money orders are considered cash because why? They can't track it. There's not really a way to track it unless everybody's being 100% honest. So we are in a digital world, but it's changing even more. Now we have the CBDC coming out. More than likely, it seems that way anyway. I think they're just trying to critique it. It might take a couple more years. Who knows? But when that does happen, it's kind of like everybody having like a social security number where you have your digital currency and it can be controlled and leveraged, so you can spend as only what they want you to spend. And I'm not talking about the government. I'm talking about the central banking system. And it's kind of gets into a big thing. So it is changing. It doesn't mean it's in the world. It just means that this has happened before where, it's changed. Just in the last 100 years, our currency has changed more than 3 times, dramatically changed. And this is another dramatic change. So we can protect ourselves. It's the uttermost importance to for you to start doing it and start talking to your friends and your family and make sure that they're buying silver gold, whether it's from Mintbuilder or not. It doesn't matter. We're going to get them the best prices, obviously, but as long as they're getting silver and gold, all prices right now are going to be good prices in the future. When silver and gold double, triple, they go 10 times the amount, they're going to be like, well, I guess I shouldn't have been like fussing around about 10 cents less here or there. It doesn't make sense. So it's important to start that. Now, I was telling you about the fair price pendulum, and I created this tool. We're actually building a widget right now for all of our members to access it. It'll be in their account, so you can utilize it at any moment. It's really cool. So basically, when you compare, let's say housing. Oh my gosh, houses are going up so fast and the price is so high. I know they've come down recently a little bit, but I always hear all the time from people I associate with, they just can't believe the housing market or whatever, or some friends that are like major investors and all this kind of stuff. And a lot of LLCs are coming up and buying them all up. And I know it's cooled down because of interest rates, but this is a great tool because what we've been taught to do is to compare houses, cars, food, everything that we buy, in the world, gas. We're comparing it to the US dollar. And the US dollar is fluctuating like crazy, right? But is it fluctuating up and down really? No. What's happening is, think of you standing on a ledge, right? And you have a pebble in one hand and you have a feather in the other hand, and let's say there's zero wind, right? It's only gravity. You toss them both off the ledge, and one of them's falling faster than the other one, right? And the other one's kind of floating down, but they're both going down. And so we're comparing currencies like this, saying, ooh, if the US dollar is the feather, look how good it's doing. This other currency is way here, so it makes the US dollar look like it's going up, but it's really not. It's just going down at like this level when some currencies are going like this. And there's going to be a point in time where the US dollar does go dramatically down, and it's kind of planned because there's only a certain amount of leverage they can do. They can buy all of the treasuries. The Fed can buy all the treasuries up, to try to put more money, more currency into our system, and then all of a sudden they start like selling all the treasuries to take all the money back. So then there's a scarcity of money. And it's a really, really dangerous game, and they cannot control forever. We're past that point already. So that's important to understand. So now when I'm talking about the fair price pendulum, and when something is 100%, that means like, let's take the last 50 years. That's what I like to use in this thing, because that's when gold became legal again. So that's a fair place to start. And if you compare, let's say, a car to the US dollar, you're going to say, what is the median price of a car in 73, 1974, 75, 76, all the way until 2023 every year. And then you take the median of all the medians, that would be what the fair price is, right? And when you're comparing it to US dollars. And so it'll be, if it's exactly on that mark, then it would be 100%. So it would fit right here. But if it's less than the median price over all of the years, then it means it's undervalued and cars are cheap right now. And if it's over that, then they're overvalued. Now, there's something really cool about this. It's really important to not only compare something, to really know what's going on in the economy. Don't just compare it to the US dollar, but compare it to assets like gold and silver. Then you kind of get a better picture of what's happening. And I'm going to show you some stuff here. So let's compare a house to gold. Okay, so it normally takes 209 ounces of gold to buy a house. So the house that I bought, the house is kind of old. It's 1960. In 1960, it took over 209, just barely over 209 ounces of gold to buy the house. Today, it takes over almost the same amount, over 209 ounces of gold to buy the house. It's so weird because the price of the house is like way up, right? It's like some people are like, that's just crazy, ridiculous. But it hasn't really changed when you compare it to an asset. That's telling you and showing you, proving to you that gold and silver are something that's going to actually preserve your wealth. So let me just show you what's happening right now. What is happening with the house market? You know, people say it's crazy right now. It's so insane. Okay, it takes 218 ounces of gold right now to buy the median priced house. Okay, so what does that mean? Oh, it's overvalued by 4%, not 100, not 200%, like everybody thinks it is. And then what about gold to the Dow Jones industry? I'm going to show you there's a massive bubble going on right now that people don't know about, and I'll explain it to you exactly why it's a bubble in just a second. So overvalued, undervalued, what do you guys think? It normally takes 8 ounces of gold to buy 1 share of the Dow Jones industry over the last 50 years. Every year, when you median out the price, it's 8 ounces of gold. You get yourself a share, right? So what would that be? Now, it takes 19 ounces of gold to buy 1 share of Dow Jones industry. That's completely ridiculous. There's no other time in history where it was anywhere near this. We are in major trouble with our stock market. And again, I am not a financial advisor. You can trust one of those and find one if you want to. I really recommend you do some real research on it yourself. But I'm telling you from the research that I've done and looked into that we are in such a huge bubble with stocks. And I'm going to tell you a little bit. I'll tell you a little bit more about it. Okay, I'll just go ahead and jump into it now because I'm going to be talking about gold and silver in a second. Okay, so why are we in this big bubble? So we all know about the bailouts of what happened after 2020, right? You know, when COVID hit and we had all the shutdowns and a lot of companies went out of business, lots of government spending, you know, the Fed was in overtime, like buying up treasuries and like getting more money in the system. And you know, we got a little stimulus as individuals. But if you actually understand the amount of the money that was put out there and how much of it went to individuals, it's a little tiny sliver of the amount of money that was put out there, you know, the more than $1 trillion that was put out there. Where did the money go? So here, let me tell you where the money went. So the central banks, right, they're over a large group of the big banks, not all of the banks. They're not all created equal. So you have JP Morgan, you have Wells Fargo, Bank of America, and a few others that are the major banks. And so the central banks, what they were doing is they were pouring the money into those major banks. And then the major banks were supposed to use that money to basically get it out to the majority, all of the U.S. citizens. And some of the same stuff went on around the world in other countries too. But in the U.S., that's what they were trying to do. But what happened was actually is a lot of the money was given to big corporations, and matter of fact, for free. They didn't have to pay it back. And I know they did this. They had the SBA, the small business, funding, and we thought that was only for small companies, but ended up being way bigger. And so all that money went in there. And so you would think that these companies would take the money and then they would they were supposed to take the money that they were getting and they were supposed to bolster their company. They were supposed to hire more employees, get more people jobs, get people flowing again, get them going, getting some more money going, get more products going, things like that. But they didn't do that for the most part. Most of them used all of the money or the majority of the money without hiring anybody else back to go ahead and buy back their stocks for their company, to buy their own stocks back. And by doing that, they basically raised all of the prices of their stocks. So some companies, like if you notice, why, when our economy is doing so horrible, why are all these companies stocks going up through the roof? Why are they going up so fast? Like immediately after March ended in 2020, all of a sudden all the stocks took off, right? I stuck money in some stuff with oil and double, triple my money because I was like, oh, I mean, we're playing it's like, don't hate the player and don't hate the game. Just figure out what's happening. But what these corporations did was they bought back their shares of stocks, a whole bunch of them, made all their shareholders very wealthy. A lot more billionaires were created, a whole lot more millionaires were created because of this free money. So basically what the feds did is they just ended up not necessarily directly or intentionally, but they gave all of this money to already the wealthy elite class, and they just got way more rich, and everybody else didn't. Matter of fact, most people are suffering now. There's a much bigger gap now between the lower class and the upper class. The middle class got squeezed. And that's what's making us in trouble, because the middle class is pretty much what stabilizes a country. So that's what happened. That's why this is a bubble. And all of those shares they bought back, Warren Buffett, to note, did not do that with his company. He packed it away into like liquid assets, cash, so that he can, use the money to buy up companies that he's predicting. A lot of these companies that bought up their shares getting greedy and raising, their stocks and making all the shareholders rich. What's going to happen is when the squeeze comes back in, and this fair price pendulum will swing back, and it'll probably go past the median. Usually when it swings, the momentum will take it somewhere in the undervalued territory. And then a lot of these big companies, most of us think of are like super stable companies, are going to go out of business. And Warren Buffett's going to swing in, and he's going to buy them all up for pennies on the dollar. That's what he's going to do, because he knows and sees what's happening with this kind of stuff. And we can also see and know and understand it as well. So there is a huge bubble. Assets will protect you. What about gold and silver? Just for the fun of it, there's always a gold silver ratio. Typically, when you're taking over when you're talking about the last 50 years, the median of the median prices, it takes 63 ounces of silver to equal 1 ounce of gold. So if you want to buy an ounce of gold and you have 63 ounces of silver, you sell it, it's traded in for gold. Okay, but right now it's not the case. Right now, gold is a little bit, gold is a little bit more overvalued, or rather, silver is undervalued. Silver has been way undervalued, and there is a reason for it. Part of it was JP Morgan Chase, controlling it, and they did get in trouble, but they got penalized and had to pay a fee that went to somewhere that to benefit others. But anyway, so 129%, so it's a little bit off. So 82%. So what does that tell me? What it tells me personally, this is just my opinion, but it tells me that when I'm saving, I lean a little bit more towards saving more silver than I do gold. So maybe I'll buy like 75% with my savings. I'll spend 75% on silver and 25% on gold. Now, if it comes back down to this, 60s or lower 70s, then I might do 50-50, or I like to lean a little more towards gold in that aspect. But we have seen the ratio get close to 100 before. That's when it's a great time to liquidate your gold and turn it into silver. So, and again, I was telling you, there's good times to buy and good times to sell. There is going to be a time when gold and silver are going to be overvalued, when we have a huge run, which I believe is going to happen, when the stock market bubble bursts. Everybody and their mom and their dad and their brother and sisters are all going to be flying in trying to buy silver and gold, and then it's going to be too late. It's going to go up. Gold will probably be $10,000 an ounce. Silver will be hundreds of dollars an ounce. It'll be too late at that point. But the good news is, hopefully you've listened to me, and you already own plenty of silver and gold, and then that will be the point where you sell that silver and gold, and then what's going to happen is it'll come eventually back to its normal price range. And when you sell that silver and gold, guess what's probably going to be undervalued? Other assets, maybe stocks, maybe housing. Who knows what's going to crash? I think it's stocks, but there's going to be stuff that's going to crash when silver and gold go way, way up here. And that's the time to sell it all, buy the other side. Now you're going to capitalize both sides of it. Instead of just making, it's great to make the money from, buying silver and gold and profiting, but what if you can sell it and then double capitalize by buying undervalued assets? That's what the billionaires do. That's exactly what they do. It's getting a keen eye to know what's undervalued and what's overvalued. And that's why we're building this widget, just to kind of help people to, just on the basics side of it, to see what's happening there. So precious metals, they come in two distinct forms. We have bullion, which bullion is private minted or it's government minted. It doesn't have to be just private minted. Like a silver eagle is still considered bullion, but it's a bullion coin. Whereas if you buy, let's say, Sunshine Mint round, it's still round, looks like a coin. People call it a coin, but it's not. It's actually just a round. And then we have numismatics. They both have their own distinct purposes. I like both of them. My savings is with bullion. The reason why my savings is with bullion is because it's crisis protection. Okay, like I've been talking about this whole time. It has lower premiums. You're going to be able to get more silver and gold for the money you've worked so hard for, that currency that you've worked so hard for. You're going to be able to buy more silver and gold for it. It's outperformed cash savings. That's an obvious one. And numismatics, on the other hand, I don't think of numismatics as a savings. I think of it as a collection. Think of it as fine art. So, you know, some people say that fine art is in a really bad economy. It's one of the things they say, you know, like, you know, people putting like 5%